can see Dell shares there at 1364, right? Not moving a lot, basically flat on the day. It's a really quiet day on Wall Street. What's interesting about that, though, is that some shareholders think that this stock could get a lot more in a deal. They are making their voices heard, and this Dell going private deal that seemed pretty assured before Friday now may not be so much. Andrew Barry from Barron's is here to talk about this one this morning. Is this deal in real trouble?
I think it is. I mean, the largest outside shareholder, Southeast Asset Management, which owns 8.5%, has come out and strongly urging the company to, or urging shareholders to basically not okay the deal. And other shareholders are also very unhappy. I can't find one that's basically happy about this transaction.
Wow, besides Michael Dell.
Michael Dell, I mean,
Right.
he loves the deal. Basically, it values the company about 8 times earnings or 6 times earnings after their cash. Most LBOs are done for double that price. So this is really an outlier.
Now, what exactly doesn't Southeastern like about this deal?
Well, they think the company's
Besides
worth,
the share price.
They think the stock's worth about $24 a share. They think it dramatically undervalues the PC business, the enterprise business they have, the server business, and a lot of their newer businesses as well. I mean, they say the whole package is worth 24, and so that's basically their big beef.
Right, but the stock hasn't seen that price in years, right? I mean, it's one thing to say we think it's worth that, but it hasn't been there in so long. Does the market?
The stock was 18. Stock was 18 a year ago. I mean, yeah, it hasn't been 24 for a little while, but it was 18 a year ago, and so. You know, the company's supposed to earn about $1.75 this year, and you know, big cap tech companies trade for about 10 times earnings right now, and Dell's much cheaper. So the whole sector, I think, it has a relatively low valuation now, and that is true that it hasn't seen 24 for a while, but doesn't mean it couldn't do it.
Now, Southeastern, I think they have about an 8.5% stake, right? Biggest outside shareholder. Some of the other shareholders are getting on board. Can they squelch this deal? Do they have that? How much muscle do they need to get behind them?
It's tough to tell. I mean, the deal needs 50% approval, excluding the Michael Dell stake. So it makes it easier for the opponents because Michael Dell's 16% stake is not voted in favor of the deal. So basically, it could be tough. I mean, index funds may or may not vote for it, and arbitrageurs actually might be inclined to sell right now because you know, the stock is trading pretty much at the deal price. The stock is trading a penny below the deal price now, which suggests that people think that Michael Dell will have to increase the price to get the deal done, or that the deal goes down and maybe a better alternative surfaces.
Right, that's what I was saying. And Dell has come out and they said, look, we looked at all the options. This is the best option, right? That's their story, and they're sticking to it?
Yeah, I mean, that's their story. The question is, why do they need to do anything? I mean, this company was doing pretty well as it is. There was no need for a strategic transaction, and they looked at a lot of other things, staying public, doing their business, and basically trying to build value for shareholders over the long period of time could be a much better alternative for shareholders here.
All right, this one's going to play out, right? We got some
couple
more stories
months,
on this one, yeah.
This story is going to be a hot one for the next couple weeks and maybe months.
Right. All right, Andrew Barry from Barron's, thank you very much.